We welcome you on behalf of Prime Look Media Group on weekly review and trends with technical indicators for calculated trading this week. The Pakistan government believes that ExxonMobil is getting more confident of its drilling process, which indicates big reserves of gas and petroleum in deep sea in Pakistan territory. This is good news. Going by the narrative, that could benefit the national economy if it comes true. The other important positive news was the visit of visionary Prime Minister of Malaysia, Mahathir bin Mohamad, to Pakistan with a group of investors who signed a deal, not only one deal, but a number of deals, but the most prominent in auto sector and telecom sectors. PSX responded to these developments somehow positively, and the index, which was trailing for the last couple of weeks, saw some nominal gains in its weekend closing. After 6 consecutive weeks in the red, the KSE 100 index finally gained 225 points to close the week at 38,532 points. Average daily traded value increased by 28 million US dollars, when daily traded volume, however, lowered to 84 million shares. Besides above mentioned positives, the receipt equivalent of 2.1 billion US dollars was pouring in from China by the 20, as expected, most probably by the 25th of the March. In addition to China granting Pakistan access to its 1 billion US rice consignments, sugar and yarn industries, furthermore, the ongoing general outlook of the market was only dismal in a few sectors. Naturally, refineries showed very low turnout, followed by oil marketing companies and power generations and distribution companies. These were among the worst performing sectors. On the other hand, ENPs and banks supported the KSE 100 index quite positively. And the net foreign buying was quite good. It stood at 3.1 million shares in commercial banks and oil and gas exploration companies. Moreover, they also participated in power generation and distribution companies as well. Market saw another trigger of 300 megawatt of third power beginning trial, which is naturally very nice omen for Pakistan if it goes ahead like the way it has started its run. Other point was that the agreement between Pakistan and ADB to implement $6 billion loan program was in the offing. The Supreme Court has accepted Barrier Town's offer of rupees 460 billion in settlement of the land, Barrier Town land in the country. This week was perhaps started with better news for the national economy and for the PSX, as a lower trade deficit was the key reason behind the decline in CAD during previous month. Among exports, non-textiles, food and other manufactures led to decline to 9%. Despite a drop in exports, imports, which were twice as large as exports in absolute numbers, fell 18%, leading to a shrinking trade deficit. Petroleum imports, down by 36%, were the major contributor, while declining CAD due to shrinking trade deficit is a welcome sign. It flows in the financial accounts, it will be more significant more than ever, where any delays in inflows could cause pressure on the exchange rate, and perhaps we believe that this would not happen during the remainder of the year. The index is expected to revisit its low which it has created previously, and if it goes down from that point, from that level, it may fall below to 37,000 some points. One should be wary of these numbers, as the downside target is this which we have just told you about the numbers. However, any upside will find a resistance at 38.593 or above. Last time the market was able to break the resistance for a while, but then it couldn't uphold the level and it dropped back, and it again created another resistance at 39,000 level. So if the market crosses this level, then it could go further up as we can believe and we can understand. The RSI and the MACD have continued to decline. They have not shown any kind of improvement in a couple of weeks, supporting a bearish view. So, despite of all these good news, one needs to know that the indicators are still not supporting the market. So, the traders have got to understand the technical indicators and go with them in a calculated manner. So they should find. We are just putting few slides here, how the market behaved and how the market took the spot, and the market went down from the resistance. So these would be the indicators you to follow, watch, study, observe, and then take your decisions. We would again emphasize that if you want to remain in the market, leaving the market, going on the sideline is not a good strategy. Remain in the market, see the indicators, but don't stay in long, don't take big positions, and that's how you could go. And if in the meantime better news come in, and if the petroleum news comes clear, then naturally market is going to take a boost. After that, we are just going to tell you something about commodities market, and then we will wrap up. Commodity markets would be led by crude oil prices, which rose recently, with the cycle sensitive commodity tracking broadly in line with a pickup in risk appetite. It probably didn't hurt that OPEC officials recommitted themselves to a coordinated output cut scheme, even though the decision to extend it past mid-year looks to have been delayed until June. Gold prices were little changed, edging narrowly higher, but ultimately failing to make heavy way past familiar near-term ranges. So the commodity market would heavily depend upon these two major triggers, and however, the international market is not showing sign of improvement, although China and America are just very close to going into a deal, because China is showing a positive sign to go into a tariff contract with America, US. It happens, so it would be very good news for all over the world for the markets. Thank you very much for watching our video and comprehending that in full. Please subscribe the channel and click the bell icon so you could be able to get our latest videos and remain updated on whatever is happening around the this stock market universe. Thank you very much again. Thank you for staying with us. A good investment.